And then I will field any general questions you might have about the course before we try to get into any subject specific stuff.
I have a couple of questions.
Okay, go for it.
First of all, the homework presenters.
Uh-huh.
Okay, so if you're not a homework presenter, what is our responsibility or requirements? Do we have to watch? Do we have to participate in a discussion board? I don't want that to sound rude. Not that I don't want to, but like I already did the homework and then they posted their videos. So
yeah, so the short answer is you have no responsibilities other than posting on your weeks.
okay.
And what some students are like, no, those really help me, and other people are like, okay, I'm a lone wolf, I can't be asked to run with the pack or whatever. You have to use your best like Liam Neeson voice when you drop it down. But no, so the short answer is no requirement. You're only graded on the 2 presentations that you signed up for.
Okay. Okay. So if we need them, we can watch them. If we don't need them, we don't necessarily have to.
And you don't have to give some lame like response. I mean, if you think someone did a particularly great job, I think it's great to be like, hey man, you did a particularly great job, right? Like, but you don't have, I think before it was like everybody was giving these weird, like pretty much just acknowledging they were there sort of comments, and that's not really necessary.
Okay. And then my other question was just about the exams. Are they like accounting department exams, or are they McGraw-Hill?
They're McGraw-Hill.
Okay.
Yeah.
So the questions will be like maybe similar to the homework and the quizzes and
yeah, so they'll use, of course, they'll use similar terminology. They're right from the textbook publisher, but they are a multiple choice
okay.
or like fill in the blank. There's no like I guess problem or scenario based problems like you see in your homework.
Okay.
Okay. So, but the terminology is consistent with what you've seen in the homework and in the text.
Okay. And they're proctored, so I assume not open book.
Correct.
Okay.
So yeah, that's most people's least favorite thing about this class. Like A, not open book, B, proctorio. And proctorio is pretty terrible. Like, I mean, I can't stand it, honestly. But it's the policy set by the accounting department that there'll be proctored exams and they'll use proctorio. So
okay. So can we use like actual scratch paper, or do we have to use the whiteboard on the screen?
no, good question. So I allow the use of scratch paper, and the department said that was fine. I don't know. I don't know what this proves, but they ask you to hold the blank sheet up as if you couldn't have another one down below. Like, what I would ask is that you don't cheat. That, to me, that's even more important than holding up the blank sheet of paper. Is that you recognize that while it's important to do well on an exam and important to get good grades, it's even more important to be honest and be able to answer that question well on your Temple Recommend interview.
Of course.
I always think it's funny that I don't know, like if somebody wants to cheat, they're going to find a way. There's more ways to cheat than there are ways to catch them, I think. So honestly, just be honest. All right.
Okay, no problem.
To use Excel or just like a calculator for stuff?
No, that's another good question. Yes, you can use Excel. What kind of accounting class would it be if you couldn't use Excel? I mean, honestly,
Can you use it on the test or no?
Yes, you may use it on the test.
Okay, so that would show up like on our screen.
Yeah, Proctorio would just pick up that
that
it's on there, and no problem.
Does it provide a link for Excel options, or can we just open an Excel?
Yeah, you can just open Excel.
Okay, that's good to know.
Yeah.
That's all my questions. Thank you.
Okay. Other general questions?
What is the way that people are recording these little mini lesson things?
Sure. So what I've seen so far, most people are just using Zoom. Okay. Zoom works really great for that. Actually, I use it for all of the little recordings I do. I just record in Zoom. I just open up a Zoom meeting, but I'm the only person in the meeting, which takes away all the stage fright because it's just me. Anyway, and then I share my screen and record. And then when I'm done, you have the option of either like recording it right to Zoom's online server, and then you can just share from there. It'll give you a link, and you'll see sometimes they'll have like a passcode that's done through Zoom, or you can set it to not have a passcode. Other people use like Screencast-O-Matic, which is a free online tool for screen recordings. But Zoom's probably the most common one because everybody has a Zoom account through the school.
Okay.
Any other questions before let me share my screen with you here. So there I am, counting 201. So a couple things that some people see and other people miss, and some people think are valuable and other people think aren't. Okay, so I mean that's just how I guess life is. But the tutoring resources little link here, some people use this a lot, and you can sort of post questions in this little community. Again, some people say, "Oh man, yeah, they're really great," and other people are like, nobody ever responds to me. So I just want you to know it's there. And know that some people, and here's how you can arrange a tutoring appointment by clicking on this thing that says arrange a live tutoring appointment. I know that last semester, like the need outstrapped the number of tutors they had. I think they've tried to pick up a couple other tutors, so hopefully there'll be more availability. So I just want people to know that's there. And then in the modules, again, I put this in the announcement, but people, it's easy to miss those sometimes. So under textbook information, I just added a little module called Brother Fox's Helpful Stuff. And in there, first of all, if you forget which thing you're presenting on, it's just a link to it's honestly a Google Sheets that has, you can find your name in here and you can see where you present, and it also tells you where to post it and the post date right there. So that's in there just to make life a little easier. Let's see. And then the other thing that's in here is this little additional study content document I put together just over time of teaching this, and I add to it when people ask me for things, but there's usually a little, sometimes longer, sometimes shorter overview. It might be like you'd call it a lecture video of me just covering some of the material for the chapter. And then some of the quiz access problems, and sometimes when someone will reach out and say, hey, I'm struggling to solve this, I'll just go ahead and record me kind of walking through it. So kind of like these student videos, it's just me doing some of those. And for chapter 2, I have a little debit and credit rules study guide that some people like to use as kind of I guess like a cheat sheet until they get accustomed to, the debit and credit rules and so forth. So I just want people to know that's in there, because oftentimes people will email me saying like, can you help me with this problem? And I'll be like, oh, there's a video for it already. Just go check it out. So that's in there. I'm going to switch those links so they open in another tab. I thought that it was set up that way. Anyway, and then one more thing in McGraw-Hill, click and wait. And then we go to the, when you look in the textbook, a lot of people miss at the end of each chapter, there's a little, let's see. Let's see. Where is it at? Make sure I'm in the right textbook even. They got me teaching 2 different classes this semester, and they both use McGraw-Hill texts, but they're 2 different texts. So sometimes I'll have one open and think I'm looking at it. Yeah, so at the end of each chapter, there's a thing called summary : cheat sheet. And it's actually pretty awesome in that it really does like a solid review of everything from the chapter. And to me, that's that's worth a little review. Like when you're planning for the exam, it just, in 2 pages kind of reviews all that, hits the high points. And so I think it's a really nice tool. So, and it's easy to miss because it's kind of just hidden there at the end of the chapter. You're like, I read through the chapter. I didn't read past the problems because I do the problems online or whatever. Okay. So I guess that's the general stuff. Any other questions before I maybe move on to just a little bit of this week's material, which I can see everybody's working and already doing pretty well. Some of you are a little ahead and some of you are still working on stuff. So I'd be interested to see, so because the way they structured this course, there's some stuff due like on Wednesdays, right? And some stuff due on Saturdays. And so when we do this meeting on a Thursday, I'm always afraid if someone really needed help on the Wednesday stuff, we're missing it. But that, again, by far more people said this day would work for them than other times. And so I just real quick is going to pull up.
Brother Fox, I have a question.
Yeah.
I know that when I was doing like the smart book assignments and I would hit start reading or click on the reading, it would jump to a certain spot in the reading rather than like the beginning of the chapter. Would you suggest that we go back to the beginning of the chapter and read the entire chapter and then begin the smart book questions? Or like, are we only supposed to read like certain sections of the chapter? I was kind of confused, like obviously like which sections were, or if it's, I don't know.
Yeah.
Could you clarify that?
Yeah, no, so personal belief, okay. But I'm a college professor, so my belief may be tainted. Like smart book isn't sufficient. Like if I were taking the class as a student, I would read through the entire chapter first. That's how I learn. Now, when I say read through, I don't mean read it like a novel where I'm hanging on each participle, right? Like, I mean, usually I'll take a look at like the learning objectives and then kind of read through kind of quickly and be like, I think I understand that. Oh, this is something I'm going to need to read more carefully. In other words, I would spend a little time up front reading through the chapter. This is why I prefer hard copies of books still, probably because I like to read like that. I know people that don't do that just use the smart book and they get through just fine. And so, I mean, some of that's going to be your learning style. But often I'll have people say that wasn't covered in the chapter, and I'm like, really? Because I looked in the chapter and it was right there. But it's because I think they were just looking at those selected, whatever you want to call it, curated parts of the chapter that SmartBook did. Yeah, I'm not a fan of SmartBook because I think a lot of people go through it and feel like that was all the information from the chapter they needed without having read the chapter.
It seems like to me that smart book, it gives you all the answers for that homework assignment. I can't remember what they're called in this class, but the ones that are linked to smart book, but it doesn't give you everything you need to know for the homework assignment or the quiz.
Right.
If you don't read it all.
Right. And so, again, I think it's up to you. There's no mandatory reading of the chapter. Like in theory, if you could just get through it without reading anything, because you have checks and stuff, then yeah, but I would read it. So I apologize. You'll learn a pattern that my wife has learned over 30 years, which is I give really long answers to short questions, and I apologize for that. Anyway, so all right. So I'm just going to quick go through some concepts from the chapter, just so you know, like it's hard. This isn't like a classroom where you could like raise your hand or whatever. And like, I think the hand raising thing on whatever this dumb thing's called, Zoom, doesn't work very well. So seriously, I think the best solution, if you have a question or you're confused by something I'm talking about, is just like break in, just be like, hey, wait, I have a question. I will not get offended. I will not throw you from my Zoom room. I am the host now, so in theory I could, but I'm not that power hungry. So mostly I want to make sure everybody understands the material. Okay. So, so again, I'm sure you've learned all this, so I'll try to go kind of quickly through it. I've not learned all of it, but you've already touched on a lot of this as you started the work. The fundamental accounting equation is assets equal liabilities plus equity. Okay. And most people understand assets pretty intuitively, like it's just stuff that you can own, and liabilities is pretty intuitive. It's just like debts that you owe. but equity is a little weirder. Like, what does it mean? For me, the easiest way to think of equity is if I sort of reframe this equation and move equity to, move liabilities to the other side. So it would be equity equals assets minus liabilities. Then it makes more sense to me, because what it means is equity is the part of the business that belongs to the owner. So it's all the assets, the stuff the business owns, minus any debts it has. So like if you had a house and it was a $300,000 house and you owed 200,000 on it, we would say your equity in the house is 100,000, or the amount of that asset that actually belongs to you. Okay. The other 200,000 is owned by the bank, or, at least there's a loan against it. So the same thing in a business, our assets, what we own minus what the debt we owe, that's the amount that actually belongs to the owners. Okay. And the owners we call stockholders in corporations. Okay. And so down below this, they call this the expanded accounting equation, which is assets equal liabilities. And then it breaks out equity into common stock, which is the amount the owners have put into the business. So when my mother and I, we started a storage business together, we each put in $40,000. That would have been our common stock, $80,000 contributed by the owners. Okay, so common stock is just another way of saying money put in by the owners. Sometimes it's even called contributed capital. Okay, capital is a tricky word for money. Okay, so common stock minus dividends. Dividends is money that the owners take out of the business, right? So when the business does well and makes a profit, we want to take some of that out and use it for ourselves. That's why we have a business. And then revenues is money that comes into the business through operating by selling stuff to people. And expenses is money that goes out of the business as part of our operating, right? Part of the cost of earning revenue. So really our equity, the amount that belongs to us, only comes from what we put in minus any amount we've taken out as the owners, plus any money the business has earned minus any money the business has spent. And when we say that, we mean spent in the process of earning that money, right? So if you pay rent on your shop or pay insurance or pay wages to your employees, those are expenses, the cost of doing business. All right, so there's what all that basic stuff means. I will say that as we get into this more, revenue and expenses can be a little confusing because we list them as equity here, but really they're their own kind of accounts. A revenue account and expense account are their own kind of accounts, but we put them here in the beginning because they impact our equity. Revenues increase our equity and expenses decrease our equity. All right, so I just want to look at some transactions that could occur in a business and sort of walk through how they impact this accounting statement or accounting equation. So here we have Chaz Taylor. Chaz is a pretty cool name. Sounds like maybe a surfer guy or something. I don't know. I like the name. He invests $30,000 in a new company called Fast Forward and receives common stock. So for me, each time there's a transaction, as an accountant, I'm asking myself, well, what accounts are involved? And in this case, you have cash. So the business has a cash account is going to increase because the owner put money into the business. And then the common stock account, which is an equity account. The other thing I'm trying to figure out is how are these accounts impacted? Well, they're both increasing. Okay, so my cash is increasing and my common stock is increasing. So there we can see that the cash goes up by 30,000, the common stock goes up by 30,000. And then remember, this equation is an equals equation, assets equal liabilities plus equity. So that you always have to be balanced on either side of the equal sign. Okay, that's something we want to check for each time we record a transaction, because if it's not in balance, we did something wrong. That's one of our first checks. All right. So here he purchases supplies for cash. So if I purchase something for cash, my asset cash will go down and my asset supplies will go up. Okay. I don't like these animations. So There you can see, and here's something that not everybody knows, but in accounting, a lot of times negatives, instead of putting a negative in front of it, we put it in parentheses. That just means negative, okay? So the cash goes down by 2,500. So now the balance of cash is 27,500. Supplies goes up by 2,500. Together, they still add up to 30,000, which equals our liabilities plus equity. So there's a whole bunch of these. I will probably fully explain about 2 or 3 or 4 of them, and then I'll go faster. Okay, so just because I don't want to bore you with all of these transactions. All right, so here we purchase equipment for $26,000 in cash. When we do that, our cash goes down and our equipment asset goes up. Makes sense. So now we can see cash goes down by another 26,000. The balance of that account is only 1,500 now. Getting dangerously low on cash, Chaz. You got to be careful. And our equipment goes up by 26,000. All of those add up still to 30,000, which matches our equity. You know that one of the top 8 reasons businesses go out of business in their first 2 years is because they run out of cash. I know the answer is duh, right? Like, of course that's what happens. But what that really means is they're either not collecting money that's owed to them well, right? Or they didn't plan enough money for the capital they would need, a couple of different things. But running out of cash gets you in trouble fast. I always tell people, if you want to see how much your employees love you, tell them you can't pay them on the next paycheck and see how many of them stay, right? That actually has nothing to do with love. They have bills to pay. They could love you and still need to go, right? All right, we purchase supplies on credit, $7,100. So when it says on credit, that's a code word for, that we're not going to be paying in cash. Instead, we're going to be creating a liability. This happens a lot when suppliers say to you, like, here's the stuff, you have 30 days to pay us or whatever. Okay, that happens a lot in business. So we're going to have the supplies asset will be going up because we purchase supplies, but accounts payable is going to be a liability going up rather than our cash going down. Okay, so we now owe the $7,100. You'll see our supplies increased by 7,100 and our accounts payable increased by 7,100. Now we have 37.1 and 37.1 on either side. So whenever it says on account, you're going to create an accounts payable. When it says that you purchase something on account, it means you're not paying cash. It means instead you're creating a liability, and that's called accounts payable. Here we provide services for cash. So we're actually going to sell something to somebody. All right, that's a good sign, especially when our cash is low. So they provide consulting services for cash. Cash, an asset, goes up, and then revenues, which are going to impact our equity, also go up. So now we can see the cash increasing there, the revenue increasing there, and we're still in balance. So remember, revenue is just money we earn by providing goods or a service, okay? Here we pay expenses in cash. Now this is a little confusing. So when we pay for expenses in cash, our cash goes down, that makes sense. But we'll say that our expense goes up because we have a balance now in our expense account that we didn't have before. But what's confusing about that is when expenses go up, it reduces our equity. And so that really confuses people when they're working with this at first. And so our cash goes up, our cash goes down because we're paying it, and then our rent expense and salaries expense both go up, which will have a negative impact on our equity. Oh, that's what it says right there in the bubble. So I'll show you what that looks like over here. And it has to work that way actually because our cash goes down 1,700. And so our expenses are actually going to reduce our equity. Okay. It makes more sense to me to think, okay, expenses reduce equity. right? I'm paying money out of the business to cover costs. But it's confusing when someone says, oh, your expenses went up, and then we put them in as a negative here. And we're putting them as a negative because they reduce our equity, not because the account itself. It's actually when we get into the next couple chapters, all of this will not be as confusing, because then we'll recognize expenses as their own kind of special account that happen to reduce equity. All right, we provide services and facilities for credit. So now again, so this says for credit. So when we're providing the services, that means that we are earning money, okay? But we're not getting paid in cash. Instead, we're getting paid in what's called a receivable. That means money owed to us, okay? So we provide consulting services of $1,600 and rent facilities for $300 to a customer. So our accounts receivable asset's going to go up. Accounts receivable is a special kind of asset. It just means money owed to you by a customer typically. And our consulting revenues is going to go up, and our rent revenue is going to go up. Remember, revenues increase our equity accounts. So you'll see accounts receivable and asset increasing by 1,900, and then our revenue account, one was consulting revenue, the other was rent revenue, both increasing here. And again, everything still has to be in balance each time. All right, so now the client who owed us $1,900 back from transaction 8, they pay us that money. So when that happens, our cash asset's going to go up and our accounts receivable asset's going to go down, because they don't owe us the money anymore. Now they've paid us. So again, cash goes up, accounts receivable goes down. So here we'll see the increase to cash, the decrease to accounts receivable. And then everything balances. Here's where we pay our account payable. So we pay $900 as a partial payment for the supplies we purchased back in transaction 4. So when that happens, our cash is going down and our accounts payable is going down. We're paying off a portion of that debt. So again, we'll see cash decreasing by 900. So the new balance is 5,000, and accounts payable decreases by 900. So the new balance is 6,200. Couple more. This might be the last one. So here, the owner withdraws $200 for personal use. When the owner or when a stockholder withdraws money from a corporation, they call that a dividend. Okay, that's what that word is. And so when we pay a dividend to the owner, then our cash is going to go down and our dividends are going to go up. And just like expenses, when dividends increase, they actually reduce the equity of the business. Okay, a dividend and an expense behave in the same way. The only difference is that expenses are tax deductible because they're a cost of doing business, whereas dividends aren't, because it's the owner taking money out. Instead, the owner gets to pay extra taxes on that dividend. There we'll see cash going down by 200, dividends going up, but we're recording it as at a negative 200 to equity. Okay, and it all balances. All right, so here's a summary of all the transactions we just recorded in the first month of this business's operations. And so you can see this whole summary and then a balance at the bottom of each one. So at the end of the month, we have 4,800 in cash. We don't have any accounts receivable because we collected all of that. We have 9,600 in supplies, 26,000 in equipment, and that should equal the amount of liabilities and equity. We have 6,200 in accounts payable, 30,000 in common stock. That represents the money put into the business by the owners, minus 200 in dividends, which represents money drawn out of the business by the owners, plus revenues, the money earned by the business, minus expenses, the money spent to operate the business. And all of those will equal each other. And so when we have that summary, we have all of these balances to our accounts. That helps us to create financial statements. I like to think of financial statements just as a way of taking kind of complex financial information, all of these transactions, and summarizing them in such a way that even a person who's not a business expert could take a look at it and have some idea of how the business is doing. Okay. A lot of times in real life, when I'm preparing something like this, it's for the owner of a business, because a lot of owners are like my wife, who's an artist. And she understands, she's a very intelligent person. She understands money and numbers pretty well, but doesn't care very deeply about them or the transactions. She paints big murals, and I mean, she'll get paid between 3,000 and 10,000 for a piece that she paints. And she always says, you know, what they don't know is if they just like bought me a pizza and like got me babysitting for my kids, I'd probably paint for free. Like she just loves it and doesn't even care about the money. And I'm like, no, if we're without you for a month while you're painting that mural, we need to get paid. So it's me pushing for it. So, but this helps me to, I can create a statement to summarize for her the health of the business. And she likes that. She could look at that for a couple minutes and be like, okay, so we're making money. And so that's often what you're doing. Like when I do consulting work, it's just trying to like take complex things and make them simple so decision makers can make good decisions. So the 4 financial statements that we're going to focus on, I call these the 4 basic financial statements, or the most common ones, are the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flows. So this is straight out of the book. Okay. So an income statement, you will see, summarizes revenues minus expenses. And at the bottom, you'll either have a net income if you had more revenue than you had expense, or if you had more expense than you had revenue, you'll have what's called a net loss. Okay. So for this business, we had 5,800 in consulting revenue and 300 in rental revenue. So 6,100 in total revenue. And then we had expenses of 1,700. So we had a net income of 4,400. Hey, good first month, Chaz. Proud of you, buddy. That's good work. Actually, I can't say buddy because I know a lady named Chaz. Her name's Chastity, and she feels like that's too Puritan, I guess, or something. And so she just goes by Chaz. You don't hear that name anymore. Anyway, so once we've done our income statement, then we can prepare our statement of retained earnings. We have to do these in order because there's going to be info off of the income statement that's going to flow to the statement of retained earnings. So the statement of retained earnings, and retained earnings just means any money the business has made that it hasn't paid out to the owner. Okay. So because this is a brand new business, they had 0 retained earnings at the beginning of the time period. This is the month of December. And then we're going to add the net income. So that's the earnings of the business, and then subtract any dividends, and we'll be left with the retained earnings at the end of the month. So there's the statement of retained earnings. And then we have the balance sheet, which summarizes the assets, the liabilities, and the equity. So this summarizes that fundamental accounting equation I showed you up front. Okay, and you'll see that they balance. Some people feel like it's called the balance sheet because it has to balance, which would be cool. But I think it's actually called the balance sheet because it shows the balances of all of the accounts. But you believe what you want if it makes you happy, right? My son and I had an entire discussion about subjective truth, and I was struggling. We could get on the philosophy of subjective truth some other time. Anyway, so this company, there's the total assets, the total liabilities, and the total equity. You'll see that, again, we had to do the statement of retained earnings first so that that retained earnings number could flow into the retained earnings section here on the balance sheet. Finally, we have a statement of cash flows. So if a business did all of their business in cash, meaning their sales transactions all occurred in cash, they got paid immediately when they sold stuff, and all of their purchases of supplies and everything else, they paid cash for those immediately, then their statement of cash flows would match up exactly with their income statement. But in the real world, that's not how it works. Sometimes we give customers time to pay, or sometimes our suppliers give us time to pay. Sometimes we borrow money. And so we could have cash increasing even though we didn't earn any cash, right? Or sometimes we have shareholders putting money in or paying out a dividend. So the statement of cash flows is just meant to summarize the cash flows, the cash coming in and the cash going out. So it's broken into 3 sections. First is called cash flows from operating activities. The second is cash flows from investing activities. And the third is cash flows from financing activities. Operating activities is the day-to-day operating of the business. So money coming in from selling stuff to customers and going out for paying expenses. Investing activities are any purchases of long-term assets or sale of long-term assets. Like this business purchased $26,000 of equipment. That's not just for use with one customer, and it's not just to be sold to somebody. It's stuff we're going to use for the long time. So anytime we buy buildings or land or equipment, we call that investing in the long term of the business. And then finally, financing activities. These are how the business raises money other than through operating activities, which usually means either receiving cash from the owners, so capital stock, or borrowing money like on a loan from a bank or from a bond issue or something like that. So we can see here that we have the cash received from our clients. Remember the 4,200 in sales and then the 1,900 we collected in accounts receivable. Cash paid for expenses. And that leaves us, that means our cash brought in our operating activities brought us in $1,000 in cash. Our investing activities, we paid $26,000 for equipment. So we spent $26,000 on investing activities. And then our financing activities, the shareholder paid in $30,000. That was that initial investment. And we paid out a dividend of $200. So our financing activities brought us in $29,800. Then we just total those 3 up and we see there's a net increase to cash. And then at the bottom, it will always show the cash balance at the beginning of the period and the cash balance at the end of the period. And that cash balance at the end of the period should match the cash line here on our balance sheet. That was a quick talk through of financial statements. And I hope it was useful. Again, I know a lot of you have already started on work with these things. Sometimes I think that's better. It's kind of like when someone tries to explain a card game to you and they're like telling you all the rules and you're just looking at them like, I don't know. And they're like, okay, let's just play a couple of hands, right? And then after you play a couple of hands, it makes more sense. So maybe a chance to get started on it before this is actually helpful. So questions about that I just went over?
I have a question on one of the assignments, but it does relate to what you were just going over.
Okay, so before we get to that, I just want to make sure no questions on that presentation, and then I will gladly take assignment questions. Any questions about what I just covered there?
Yeah. Can you
Okay.
go over real quick where beginning retained earnings comes from?
So let me bring this back up. Is it Alice? Who asked that?
Yeah.
Okay, so beginning retained earnings comes from, like, in the case of a brand new business, there will be no beginning retained earnings. That's why it's 0 for this business. But for now, when we move into the month of January, our beginning retained earnings will be the same as our ending retained earnings from the month before. And so if we were doing January statements for this business, our beginning retained earnings would be 4,200, and then we would add the net income for January, subtract out any dividends for January, and that would give us the January ending retained earnings. Does that make sense?
Yeah.
Okay.
I have a question.
Okay.
In your presentation that you just did here, you didn't touch on the indirect method of the statement of cash flows. How comfortable do we need to be with that?
So I didn't really touch on the statement of cash flows from a creating one standpoint at all, right? I just kind of walked through what it is. So I would not invest tons and tons of time into it. How about that? I would read through it
Okay.
and be familiar with it. But you know, the direct method is kind of what's used almost all the time. And like anymore, I don't even have to create these statements, right? I just log my transactions into a system, and then I'm like, give me reports. But for the class's purposes, they're going to introduce the idea of both the direct method of creating a statement of cash flows and the indirect, but I wouldn't invest a ton of time in it.
Okay, I didn't know
Enough.
if that was gonna come back. I'd never, I've taken a couple of accounting classes. I've never even heard of that before, so that was
Yeah.
new.
Yeah, enough to honestly to get through the homework is plenty.
Okay,
Yeah, there's a couple things that accounting textbooks still go old school on, and you're like, but nobody does that, you know. But anyway, so let's take a look at, who was it? Was it Jessica? Who was it that had a question about a homework problem?
Yeah, on the quiz, problem 7.
Okay, give me just a second and I'll pull it up. I'm actually going to stop sharing for a second. I'm always afraid I'm going to like click on the grade book and like everybody will see everybody's grades, and then like I'll get like in trouble for violating your student privacy rights or something. So I just like stop sharing. Let's see. I don't trust my clickiness. Let's see. All right, so quiz, not the quiz access, but the quiz itself.
Yeah, the quiz itself.
Okay. And then I'm going to preview. You said number
7. It's just going through like the balance sheet, the income statement, and like the statement of cash flows, but I'm struggling with understanding the operating, investing, and financing differences,
okay.
but then also exactly how it's wanting everything to be put in here, because it's just like,
Sure. So I'm going to bring it up in instructor preview mode here, so you can see the numbers in here that they've done, rather than starting back and trying to work all the way through it. That might take too long. So it gives us, let's see, where's our list of transactions at? Okay, they're just here. Okay. So do you want me just to talk through these maybe? Would that be helpful to you?
yeah. And then
Okay.
also explaining like the operating, investing, and financing a little bit,
Right,
'cause I
right.
struggle with.
Sure. So here the owner invests $525 cash into the business. So on the balance sheet, that means our asset cash is going to increase, and our asset capital stock is going to, or not asset, our equity capital stock is going to increase. So there's our balance sheet. It'll have no effect on the income statement because it's not a revenue or an expense. And then the statement of cash flows. So again, this is what you have to remember is like money from operating, so which means revenue and expenses. Okay, that's what's going to go in the operating activities section, revenue and expenses. Investing activities is the purchase of long-term assets, so land, equipment, buildings, or the sale of those long-term assets. And then financing activities is either receiving money from the owners or borrowing money. And so that's kind of how I have to talk myself through. So in this case, I'm receiving money from the owner. So that's going to be a financing activity. So here we receive $325 in cash for services provided. So our asset cash will increase, and our retained earnings will increase through equity, through revenue. Okay, so we're just going to say our revenue is increasing. So an increase to revenue is a net income. And again, remember I said anything that is a revenue or an expense is going to be part of our operating activities. Here we're paying cash for employee wages. So our asset cash will go down. Our equity will go down with an expense. That will reduce our net income because that is revenue and expenses, right? And then again, anything that, so pretty much you'll notice this pattern. If it's in the net income category, it's also going to be included in the operating activities category, because that's really summarizing those revenues and expenses. You'll see another one that comes up here that is a little different, and I'll explain that. Here we buy equipment on credit, so our assets increase. And since it was on credit, meaning we're not paying cash for it, our liability, our debt increases. So I have a question for you. Why do you think, since I just said the buying of equipment is typically an investing activity, why do you think on this transaction there was no effect to statement of cash flows? Anybody have an answer for that?
Because it was on credit?
Yeah, because no cash changed hands. That's why we need a statement of cash flows, right? Because even though we're spending money, we also need to know how much cash we have, because if you run out of cash, you're in trouble. So good answer. Here we purchased $675 in supplies. So again, our asset supplies will increase. And since it's on credit, our liabilities will increase. And the same thing, no effect to cash flows because no cash changed hands. But here we buy equipment for cash. So this is interesting. It says plus and minus on the assets. That's because our asset cash is going to go down, but our asset equipment is going to go up. So we have two assets. In fact, it's a really common transaction you'll start to see as you do more of these, where we're exchanging one asset for another, right? Like equipment for cash. Think about the things we do. Probably the most common transactions in real life are asset for asset or asset for expense, because we're paying our wages, we're paying for supplies, we're paying for et cetera. And then in this case, the purchase of equipment is an investing activity. Equipment by its definition is a long-term asset. And what that means is an asset that we intend to use over an extended period of time. So I do have another, just as a warning, I have another class start coming on at the top of the hour. So if somebody pops in, that's what's happening. I guess I should have blocked it or something. It's probably a way. Can I say, oh, well, there it is. Block meeting. All right. So, all right. That way they don't come in and think, oh my gosh, I missed the meeting. Different class. So I don't know, Jessica, is this answering your question or is it not really helping? I don't want to
It
keep
is.
going.
It's
Okay.
mainly the operating investing, like how you said, like you leave it blank if it's on credit, or it's operating if it's like dealing with revenues and expenses. So that's like the net income stuff. With
Right.
the investing one on problem 7, how do you know it's an increase rather than like the same thing as an increase or decrease?
On number 7. So,
On number 6, sorry.
okay. So number 6, we have it's a decrease in cash because we're buying the equipment. So our cash is going down. So this
So
is
it's
just
whatever
summarizing
cash
how
is doing. Like if
Yep.
you're receiving cash, then it's an increase. If you're
paying
paying in
cash.
cash, then it's a decrease.
Yep.
Okay. And then what about the financing activities? I see that you have it on like 9.
Yeah. So number 9, we're paying a cash dividend. Okay. So that means we're taking a portion of our operating proceeds and paying it out to the owners. Okay. So so we would say that receiving money from the owners is a financing activity, but also paying money out is a financing activity. Just that receiving money is a positive cash flow financing activity, where paying money out to the owners is a negative cash flow financing activity. Does that make sense?
Mm-hmm. So that one
Okay.
would be negative then.
Yep.
Thank you. That
All right.
helps answer my questions.
All right. Tara, I see you have your hand up. It's kind of, I guess it's that way.
Yes, I came to the class late, and I was wondering if this was a recurring meeting, or is this the only one?
Let's see. Hold on just a second. I want to make sure. Tara, you're in accounting 201 or accounting 101? You're in 201. Okay. Just want to make sure you didn't come early rather than late.
Oh, yeah.
So this is a recurring meeting. We'll hold it every week at the same time. If I have something come up where I can't, like I know I have Young Women's Camp coming up at the end of May, then I'll just let you know in advance. unless I can find some way to do the meeting from the mountains up there, but anyway. All right, so we're about out of time. Any parting questions, I guess, before we call it a night?
Does your wife have a website or anything where we can see her art?
You know, I don't know. I don't think so. Thanks for asking, but I know for a while she had like a Facebook site, but let me find out for sure what she's maintaining there, because I don't think she maintains much. She's hit this point where it's like there's a lot of local work, and so she doesn't advertise much. People just sort of reach out to her, so I don't think she's maintained the site. But I'll double check.
Brother Fox, I have a question. I don't know if we could look at the homework problem number 8, which I think would be so simple, but I don't know why I can't figure it out.
By the homework problem, you mean the quiz access, or?
Yeah, the one that
Okay.
had the 18 questions. And it's
Yeah.
number 8, and it's part B. Like part A, I got fine, but part B, for some reason, I'm not.
Okay. Bird Company. Okay, B. So let's see. Snell Company performs and completes services for a client in May and bills the client $3,200. In June, the client makes a partial payment of $1,400 in cash for services. In July, the remaining $1,800 in cash is paid. Determine the monthly revenue recorded in May, June, and July for this service. So here, what they're getting at is that under what's called accrual-based accounting, which is really what we're learning about in this class, even if they haven't used the term much, we record revenue when we earn it, not necessarily when we collect it. And so they're telling us up front that we performed and completed the services in May, and then we're collecting money, in June and so forth. And so they just want us to recognize that we would record all of that revenue at the time we earned it in May, and nothing in June and July when we've just collected it.
Okay, that makes sense. Thank you.
All right. I think I need to sign off so I can let that next group in.
When will you post this video?
As soon as I get it uploaded. So probably after my next meeting. So probably around 7 o'clock or so.
Thank
And
you.
I'll just do it in the announcements. I'll just post an announcement saying, hey, we had our meeting tonight. Here's the video. All right. Anybody willing to offer a closing prayer before we go? I know many people are willing, but no one wants to be the person who volunteers.
I can do it.
Awesome. Thank you.
Dear Father, thank you so much for the opportunity that we had to be able to gather today via Zoom to be able to go over the lesson materials. And please bless that we were able to have a greater understanding, and that we'll be able to grasp the homework assignments. And we thank you so much for all that thou hast done for us. And we say this in his name is Christ. Amen.
Amen. All right. Thanks, everybody. Nice to meet you. I know we didn't have time for much meeting, but it was nice to meet you. Have a great night.
Thank you.
Thanks,
Thank
Brother
you.
Fox. Thank you, Brother Fox. Have a good night.
You too.